Hello and welcome back to Morning Markets. It's Friday the 12th of March. My name is Paul Durrans, Investment Director here at True Potential. Today I'll be providing an update to what has been happening in financial markets over the past 24 hours, what the key drivers were and what I'll be looking out for today. Yesterday saw positive equity market returns across the board in many of the key regions, although there was a reasonable amount of dispersion. Overall, investor sentiment has continued to grow with the passing of the US fiscal stimulus package at $1.9 trillion, but also we've seen better than expected economic data come through, which I'll discuss in this video. The S&P 500 was up 1%, whilst the Nasdaq was up 2.5%. Over in Europe, they were also up 0.7%. However, returns from the UK were more muted, with the FTSE 100 up just 0.1%, whilst the more domestic UK market, the FTSE 250, was up 0.6%. Overnight in Asia, we saw China also produce positive returns up 0.5%, whilst Japan was also up very strongly at 1.7%. The US stock market was the standout region, with the large technology and consumer discretionary stocks being the strong performers, which have been noticeable laggards in recent months as investors rotated to economically sensitive sectors such as financials, materials and energy as economic activity has gathered pace. The Russell 2000, which is an index for smaller companies, continued to surge higher after some impressive returns in recent months. So over the day, it was up 2.3%, which is good news. There were further signs of economic improvement yesterday as we saw the weekly unemployment benefit claims come in better than expected with the initial claims released. That is those people who have recently left the workforce claiming for support. The reading was at 712,000, the lowest since November last year. We also saw advancements in the number of job openings, with the latest reading at 6.9 million v 6.6 million expected. The continued improvements we are seeing fit the narrative of accelerating vaccine rollouts, the loosening of state COVID restrictions, and improving high-frequency indicators. In Europe, the big event market participants were watching out for were the latest comments from the European Central Bank. Given the recent increase in bond yields we've had in recent months and the heating up of inflation fears, the ECB left its key policy settings unchanged, i.e. interest rates. However, in response to the recent backup in bond yields, it said asset purchases under its pandemic emergency purchase program will be significantly faster over the next quarter to maintain favourable financial conditions. Interest rates are set to remain at their low level until their inflation target is achieved. Eurozone bond yields in response to the meeting fell on the announcement. In bond markets, the widely monitored 10-year US Treasury yield pushed higher, reversing its trend earlier this week, with the yields now sitting at a one-year high at 1.58%, which I think is a reflection of the improvements that we've seen in the labour market data over the past 24 hours. In the UK, government bond yields were basically flat over the past 24 hours, so not a lot to report there. This morning we've had quite a lot of data out already from the UK. We've had GDP figures which fell less than anticipated, down 2.9%, which compares to the minus 5% forecasted. So a better result there. A fall, unsurprisingly though, given the restrictions that have been in place. Industrial production was also out, was down as well, minus 1.5%. With manufacturing weighing heavily, which could be related to the issues around the tedious EU-UK divorce. In terms of what we're looking out for today, there is more insight on the direction of inflation for the US with producer prices, which looks at the changes in prices received by domestic producers for their output. Very much a better reflection of corporate pricing power than consumer prices. That's all for today. Thank you for joining. We'll bring you up to date again on Monday. Have a great weekend.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.